Today we're going to talk about investing so you can retire. We're going to look at some ideas here on going into retirement with a comfortable nest egg. So stay tuned for the full episode. Thank you for watching. This is Richard with Wisdom Investor. Today we're going to share a couple of ideas here on investing so that you can retire comfortably. Now there's a couple of elements that you want to make sure you have covered when you talk about retirement. One is your expenses. You want to make sure you have your expenses under control. And two, you want to be able to invest, especially in your younger years and even right up until retirement and into retirement, so that your money will grow, especially with the inflation that we're seeing these days. So if you have any comments that you'd like to share along the way, leave a comment. They're much appreciated. Today we're along the Columbia River in Southwest Washington. You can see these townhomes here. They face the Columbia River. You can see the beach and a few people out there having a good time. A couple of months ago, I had a viewer leave a comment and said, I just have not had any luck with investing. I've been an investor for 20 years, but I just have not been able to make it work. So I know many of you are doing well investing, especially with the markets going up higher. And others are saying, I just don't know when I should get involved in the stock market or how to invest. So today we're going to talk about the best time to get in the markets and also look at some indicators here to help you out. We're looking at the chart for the S&P 500, the ETF SPY. This chart is a weekly chart, goes back from 2018 to 2021, present. We're not saying to invest in the S&P 500. We're just using this as a broad market index. Now, the two biggest emotions when it comes to investing are fear and greed. If we look at the bottom middle there with the circle, it says pandemic. When the market is dropping, there's a lot of fear. However, that's typically the best time to be buying, but it's very difficult, especially when things are falling apart. Up at the top right, it says where we're at now, and many people want to begin to invest at the top because there's a fear of missing out, and there's a lot of greed. You want to take advantage of the market as it's going higher, a lot of excitement. However, what happens is a lot of people will buy at that time, and then the market goes down. Then they get frustrated with investing. So we're going to look at some indicators here to help us to decide when to buy and sell. Now, if you're a young investor, say 25 to 50, you can pretty much buy at any time. The market has a tendency to go up. However, buy low, sell high is still the overall strategy you want to maintain. Now, if you're 50 and above, you're thinking about retirement, you don't want to lose your money prior to retirement, or if you're in retirement. Now, we looked at two major emotions that affect our investing. Now, what happens to your assets if the market should collapse? We're going to take a look at what the effects of a major market downturn can do to your money. Now, there's two different types of strategies. There's a buy and hold strategy. You would stay in the market no matter if it goes up or it goes down. Another strategy would be to be in the market when it's going up and out of the market when there's a major downturn. Now, if you're close to retirement or you're in retirement, if you're invested in the market and the market takes a drop of 30 to 40% and you're withdrawing your money to live on, you're going to deplete your assets much quicker. In this case, on the left-hand side here, we're looking at the dot-com market crash. If you had left your money in and you're withdrawing your money during that time period, and then the market eventually bottomed, your assets would have been depleted drastically, much greater than the 40% loss here. It took about 6 to 7 years for the market to move back up and equal where it was around the 2000-2001 period. We looked at the buy and hold approach, and we also looked at what can happen to our assets if we get caught up in a stock market collapse. Our assets can be depleted much quicker if we're withdrawing money and the market is moving down. Now we're going to take a look at some buy and sell signals. Now these work for people of all ages. We're looking at the S&P 500 SPY ETF again from the period 2018 to present 2021. So what's the strategy here? How do we protect from great losses, and how do we know when to buy? So if we look at the top left-hand corner here, you'll see in blue, and there's an arrow up above it, it says RSI. We're going to use the RSI as our indicator here. Now again, this is on a weekly chart. And then you can see the number 1 there. The red line, when it crosses up above that 50 level line, that is the buy point. And you can go down and follow that blue line there on the left all the way down to the bottom. You'll see how the market dipped and then it started to come back up. And so a good buy point is when that red RSI line crosses above the 50 line, the midpoint. And you can see if you follow that red line all the way to number 2, you can see it maintained its positioning up above the 50 line. So when do we sell? If you look at the number 2 there up at the top, you'll see that that red line, the RSI, starts to dip below the 50 level. And that was the period around the pandemic. And so that would be a sell point. You would be out of the market during that dip. Now, if you're a buy and hold investor, you would just keep your money in there. However, there's a lot of fear when the market's going down and there's a talk of a lot of companies going under. It's very difficult to stay in. So what happens is, to the average person, they end up selling down at the bottom. And then they don't know when to get back in. So when would you get back in after the pandemic? If you look at the top there, the top chart, number 3, you'll see the blue line there. The RSI starts to come back up and it crosses over the 50 line. Had you bought there at that point, you would still be in the market today. Now let's talk about what we just went over. We use the RSI, which is the relative strength indicator, as our indicator to buy and sell. When it crosses above the 50 or the midpoint, that is a buy. When it goes below, that's a sell. Typically, when that crosses above the 50, you can get a pretty long run without having to worry about buying and selling. Now you may have noticed on the charts there was a blue line. That's the RSI set to 9. That moves faster than the RSI 30 line. When that dips, it many times gives a buy point on buying the dips. Now let's go back in time again on the S&P 500 SPY ETF 2000-2008 stock market crash. We had the .com crash on the left-hand side there. If you go up to the top bar up at the top, you'll see the number 1 in red. You'll see that the red RSI line there that we just looked at on the previous chart is dipping below the 50 level. There's also a red dotted vertical line there indicating that. And you can go down and compare that on the chart. You'll see a circle, a number 1 up above the .com stock market crash. You'll see the market is declining. So that's our sell point to be out. We're looking at the S&P 500 again, a present day chart. 2 other methods a person could use. Let's say they want to be a buy and hold investor. On the left-hand side of the chart, it says buy on the dips. So if the market dips, those are good time to buy. On the right-hand side of the chart, it says dollar cost average. Depending on how your cash flow is, you could invest once a month, once every 2 weeks, but do it on a regular basis. You don't really have to try to time the market in this particular case, but invest on a regular basis and you'll either be buying shares at a little higher price or shares at a little lower price. Now, if you're going to work hard, save your money, and invest it, it's a good idea to have some type of a software to track your investments and watch these RSI numbers. You don't have to be an expert here. I use stockcharts.com myself. Now, if you have any other comments or if you have any other suggestions that is working for you, leave a comment. They're much appreciated to me and everyone else. I want to thank you for watching. Stay tuned for our next update.